Or not, we will find out soon as markets open at 9:15 a.m. But first up, let's bring you the latest, which has swept not just India or the US, but the whole world. Well, after weeks, if not months of anticipation, US President Donald Trump has finally unveiled sweeping new tariffs on trading partners. He called April 2nd a declaration of economic independence for the US. Trump said that he would impose a 10% baseline tariff on all imports to the US and higher duties on some of the country's biggest trading partners, and that also includes India, in a move that ratchets up a trade war that he kicked off on his return to the White House. First up, let's listen in to what Donald Trump said and how he announced those sweeping tariffs, holding this placard that you're seeing on your screens right now.
If you look at that, China, first row, China, 67%. That's tariffs charged to the USA, including currency manipulation and trade barriers. So 67%, I think you can, for the most part, see it. Those with good eyes, with bad eyes. We didn't want to bring, it's very windy out here, we didn't want to bring out the big charts because it had no chance of standing. Fortunately, we came armed with a little smaller chart. So it's 67%, so we're going to be charging a discounted reciprocal tariff, 4%. I think, in other words, they charge us, we charge them less. So how can anybody be upset? They will be, because we never charge anybody anything. But now we're going to charge. European Union, they're very tough, very, very tough traders. You think of European Union, very friendly. They rip us off. It's so sad to see. It's so pathetic. Percent, we're going to charge them 20%, so we're charging them essentially half. Vietnam, great negotiators, great people. They like me, I like them. The problem is they charge us 90%. We're going to charge them 46% tariff. Taiwan, where they took all of our computer chips and semiconductors. We used to be the king, right? We were everything. We had all of it. Now we have almost none of it, except the biggest company is coming in. We're going to end up with almost 40%. Lee Zeldin's working to get their approvals. And it's an amazing company. Mr. Wei, of one of the great companies of the world, actually, they're coming in from Taiwan, and they're going to build one of the biggest plants in the world, maybe the biggest for that. But 64%, we're going to charge them 32%. Japan, very, very tough, great people. And again, I don't blame the people for doing it. I think they're very smart in doing it. I blame the people that sat right in that Oval Office, right over there, right behind the Resolute desk or whichever desk they chose. Japan, 46%. They would charge us 46%, and much higher for certain items like cars, little items like cars. 46%, we're charging them 24%. India, very, very tough, very, very tough. The Prime Minister just left. And he's a great friend of mine, but I said, you're a friend of mine, but you're not treating us right. They charge us 52%. You have to understand, we charge them almost nothing for years and years and decades. And it was only 7 years ago when I came in, we started with China charge. We took in hundreds of billions of dollars from China into.
All right, Donald Trump there holding that placard and announcing, pretty much saying that India charges 52% tariff and the reciprocal tariff that the US is imposing on India is 26%. Well, we really don't know the math behind that 52%, but we will try to decode that for you. But what we do know for a fact is that markets worldwide are taking a bit of a beating, taking these new tariff announcements on their chin. And what story will play out in the Indian stock markets, we will get to know in just a few minutes from now. But we do have Modi was referred to as a friend by Donald Trump. We have some friends of News 9 joining us this morning. T.S. Vishwanath, senior trade expert, joining us this morning. Amrish Baliga, a regular face that you see on News 9, an independent market expert. He's with us this morning, and so is Nishal Maheshwari, another market expert. Gentlemen, good morning. Thank you so much for taking time out. Amrish, I want to first begin with you. Now, there is nothing new really, or nothing unanticipated by way of what Donald Trump has done. I think the confusion was whether it is going to be a flat tariff for the rest of the world. Is it going to be sector specific? But what we know is that he has cherry-picked countries which he wants to penalize more. And India is in the top 5, but definitely not the highest when it comes to the penalty that US is imposing. But US US markets surprisingly have closed in the green. In fact, I was just looking at the Nasdaq, and the Nasdaq is up about half a percentage point this morning. Most tech stocks are reacting very favorably, but that doesn't really seem to be the case with many other Asian economies, and that includes China and Japan. What you're seeing on your screen right now is the Nasdaq, and you've got companies like Apple and Nvidia, enjoying a little bit of green this morning. But if you move to Japan, well, Japan is a sea of red this morning, and some of the biggest auto names, including Toyota. Toyota is down about 5.5% this morning. You've got Honda, which is down about 2.3%. There's a sea of red coming in from Japan. Look at their electronics manufacturers. Sony is down about half a percentage point this morning. Hitachi is down about 5.5%. So a lot of companies in Japan reeling under pressure. Of course, Japan has been taxed higher than India, but we really don't know what will play out in the Indian market. So Amrish, I want to start by asking you, how big an impact do you anticipate on Indian markets as they are bound to open in exactly 10 minutes or so from now?
Looking at Trump's volatile nature, I think the only thing which is right now is there's at least certainty about these tariffs, and they were on expected lines. Though lately there was some expectation that there could be concessions for India, but that didn't happen. The silver lining is that our tariffs are lower than our competing countries, especially China and some of the Southeast Asian countries, including our neighbors. If you look at Bangladesh, which is important from a textile sector perspective, Bangladesh is much higher.
Bangladesh is higher, Vietnam is higher, Japan, of course, is higher, Thailand is higher. No surprises there, China is higher. So that's what I think India makes the cut in what Trump had once referred to as a dirty 15. Unfortunately, so despite whatever India has tried to do and buy time for those trade negotiations. But Amrish, I really don't understand whether this flat tariff of 26% is going to be applicable across industries, or there's some sectors which are going to get hit harder than the rest.
No, it is across industries, but at least for the time, exports it does not feature out there. IT
Right.
does not feature out there. So I think that's positive. Now, as far as automobiles is concerned, it's 25% flat. But then again, how many automobiles does India export to US?
That's right.
Hardly. Yeah, but then from a stock market perspective, yes, it's going to affect Tata Motors because JLR is one of the major exporters to US. They do it from UK and Slovakia. So I think they would get affected, and because of which the stock could get affected. And the other major export is auto ancillaries. But then at the same time, we have those major auto ancillary players having plants in US. So I don't think the effect will be that high. So I think, going ahead, the way I see it is this will actually bring together the global trade against America. I think there'll be a push by the world trade away from USD. So I think baby steps will start now.
Okay, if the world trade moves away from the US dollar, Nishal Maheshwari, I want to understand from you, what is that going to mean for the dollar index, and what is that going to mean, for the price of the US dollar against the Indian rupee?
Hi, morning. I think in the short term, nothing is going to happen like that.
Okay.
US is still a 35 or 30 trillion dollar economy. Continues to remain the consumption bowl of the world. So I don't think so in the short term anything of that is going to happen. I think the second level effects of these tariffs basically, which are much worse than basically what the market had anticipated, I think that's going to be a big problem. So here what we are saying basically that Trump has anyway said earlier also that in the meantime, in the short term, there would be negative impacts on the US economy. I very clearly see that there might be times basically where US economy may go into a recession, and that will impact not only US but will impact the whole world. So that is what I'm more worried about, that the consumption the world over will go down, the growth the world over will go down in the short term, and that will impact across the world. So that is my major worries. But in the meanwhile, basically, yes, pharma has been exempted, and I think that's the only silver lining I see.
All right. The only silver lining is that the pharma sector has been excluded so far. Mr. Vishwanath, thank you for your patience. I will come to you, in just a bit. Amrish, I want to bring this question back to you right now, and this question emanates from the fact that we are now seeing this 26% tariff which has been slapped on India. Now, if you were to do a simple mathematics, a trade equation that India enjoys about $190 billion of overall trade, give or take about $110, $120 billion would be India's export to the US. A 26% tariff on that is going to cost the Indian economy directly no more than about $30 billion or so. So fundamentally, I'm not talking about the sentiment on the markets. Fundamentally, a $30 billion hit is something that India can very well afford easily, right? Without getting too panicked about the situation.
Yes, and at the same time, I believe that this will come down to a certain extent, because if you look at, say, for example, gems and jewelry, which is a decent amount of exports, and here it's gone up from 0 to 26. So surely there would be reduction in that space. So similarly, when you're talking of the other sectors, also we'll see some reduction.
All right. Well, thank you, Mr. Balika. We will leave it at that for you. But Mr. Vishwanath, I want to come to you now, and I want to really understand the fact that Nishal Maheshwari was mentioning that there are going to be chances of stagflation in the US. The US economy may go into recession. But Donald Trump is definitely smarter than that, isn't he? I mean, he has advisors, and he himself, having been in the business of business before being in the business of government, has pretty much his sights on all the possible fallout of this trade tariff war that he has initiated. So at one level, I'm sure Donald Trump knows that there is going to be a short-term hit that the US economy may take with high inflation, but he seems to have the plan well laid out to not let inflation impact the average Joe in the US, because he wants to also reduce income tax. So how does that entire economics of Donald Trump's policy play out?
Good morning, Karthik. Thank you very much. And I heard the other panelists with a lot of interest, because what they're saying is how it could impact us. I'm looking at it in a slightly longer time context.
Okay.
And in my view, I don't think Trump thought it through. I think what he's doing right now is playing to the gallery. I think he has made a lot of promises when he was being elected, and he's trying to talk about it. In the short term, I do agree that there would be an impact on the US economy, and what I think Trump is hoping for is that countries would come back and start negotiating with him and start bringing down taxes. India, for instance, has a bilateral trade agreement that's currently being negotiated by the two sides. We have had exchange of people going from India to the US, US to India. We just had US officials in India last week.
Yep.
So there is already a negotiation going on for reduction of tariffs. So, but I don't think what you say, that Trump is smart enough to not think of the US economy, may be correctly right. I think he's right now playing politics. I'm sure he would think about economics very soon.
Okay, but why do you feel that he is playing to the gallery? He's got nothing to prove. He's become the president of the United States with a handsome majority. He doesn't really have anything to prove anymore. So, as I see it, Mr. Vishwanath, and correct me if I'm wrong, is that in the short term, US is expecting inflation to hit the average citizen, but in the long term, with reduced taxes, the impact of that inflation on the average Joe living in the US would become tepid. And going forward, there is going to be greater production, greater manufacturing happening in the US. So you were talking about long term. I'm also looking at it long term from the US perspective. It becomes pretty much a unilateral economy of its own, which has a sizable consumer base and people willing to pay top dollar for what they buy. So in the long run, isn't US manufacturing going to get more competitive? I understand it will require cheap labor, but then, hey, I mean, it may not be the Mexican border he opens. I'm sure Trump will find enough takers to find a job in the US from outside of Mexico if he looks at the rest of the world.
Karthik, what you're saying is exactly what Trump has been saying, but I look at it slightly differently, in the sense that if you look at it in the long term, most countries today are integrated. The markets are integrated. You can't have a country which is not integrated. And US, of all countries, has remained integrated across the globe. And that's the reason he may have come with tariffs across the globe, so that there is the kind of balance is maintained across different countries. But I don't think this raising of tariffs is something which would help Donald Trump in getting his economy better and getting manufacturing back. I think what would seriously help is sitting across negotiations. He's moving out of the WTO. He wants to make everything bilateral. He's changing the whole rules of the game. Now, that's not going to settle down very fast. It is going to take a little while. And I would think from an Indian perspective, this is a great opportunity for
Right,
us to maybe
right.
bilaterally negotiate and try and take this forward.
All right.
But we will have to wait and watch. I mean, what you're saying is something we'll have to wait and watch. I wouldn't be very sure if it would play as per the rule book that Trump thinks would rule.
All right, and there you have it on your screen. Nishal Maheshwari, let me bring you in. It's a sea of red this morning. As anticipated, Indian markets are taking a massive beating. Look at the sectors. Look at the banking sector. HDFC Bank is down about almost a percentage point. SBI is down. Look at the IT sector taking a big hit this morning. TCS down about 2.15%. Infosys down about 2.5%. HCL Tech, Wipro is down almost 3% this morning, except for the pharma sector. And remember, the pharma sector has been exempt from tariffs, the 26% sweeping tariffs that Donald Trump announced on India. It is not the Indian pharma sector. The Indian pharma sector continues to be exempted from those high tariffs, and that is the only sector which is in the green this morning, in addition to some utility companies as well. Look at the Indian pharma sector. Sun Pharma is up about 3.6%. Cipla is up almost 4%. And Dr. Reddy's, which has a huge market in the US, is up 6.5% in trade this morning. All other sectors, the auto sector reeling under pressure. Tata Motors is down about 1 percentage point. M&M is down about 0.6%. Bajaj Auto is down about 2%. And the energy sector, Reliance, ONGC, both down about 1% or so. Nishal Maheshwari, come in and tell us, was this completely expected, anticipated when you woke up in the morning to news of 26% tariffs on India?
The news of 26% tariffs was worse than expected, and the market reaction is better than expected.
Oh, okay. What were you?
Yeah, you are just down around 1.5%. The world over, basically, the markets are down 2.5 to 3.
Okay.
So I'm saying this is much better than expected. The initial reaction, what in the morning it was showing that the market is going to open at 23,000 Nifty.
Yeah.
I think it's opened at 23,150 or something like that. So I think it's better than expected, the reaction. I think there is a strong relief that the pharma sector has been, which is a large sector in India, and that has been exempted from any of this. IT exempted. Yes, IT is going to get impacted basically because as I was telling, if there is going to be a recession in the US, which is most likely to happen, then there is going to be a problem of demand, and that's why IT sector across the world is reacting, and so is in India.
All
because
right.
India
And
IT is largely US.
of course, so the IT sector is likely to be impacted, no doubt about that. How do you see from here on? It's just about 2 minutes, 3 minutes or so into the trading session. How high do you expect volatility to be today, Nishal, given that market is also just about going to start reacting, start trading? So what are the sectors, what are the industries, according to you, which will get most impacted? And how high do you think the volatility of the Indian markets will reach in the first few hours of trading?
Very difficult to say, but I'm saying basically the world over the mood is down, and I think it will be so in India. We have to start seeing basically because the uncertainty is now gone up tremendously in the market basically, because now you're talking about saying, okay, we have started with a 27% tariffs, and now it's going to be bilateral negotiation with the Trump administration. So that's the way the thing is going to be. But world over, you are saying basically that there is a rethink on the business model of the world. I think that's going to be a very I would say scary thing to think, and I think that's not going to settle in a GP. So I think you are here for uncertain times for a longer period.
Okay. And what exactly happens to the global markets, especially Indian markets, if what you're saying, Nishal Maheshwari, the US does go into recession? Do you think that recession is going to be a temporary recession and US will be able to snap out of it? Or do you think there is going to be a long-term impact on global markets, including India?
So even if a quarter or two happens in the US, basically that US goes into recession, impacts are across the world. Because as I was telling you earlier, it's the consumption bowl of the world, and there is no other country or group of countries basically which can actually balance it, and that's why I think the world over basically the impact will be felt.
Okay, thanks for that input, Mr. Maheshwari. We will let you go. I believe you've got a call to attend, but Mr. Vishwanath continues to be with us. T.S. Vishwanath, I want to bring this conversation back into your court now, and I really want to understand from you. We were talking about a direct impact that India could face on its trade, which would be perhaps about $30 billion or so, which Amrish Baligar was saying just a few minutes back that India has the capacity to take. But then there's also going to be the indirect impact on the Indian economy, not just the fact that US may or may not go into recession, but the fact that that with these higher tariffs, India's exports become more uncompetitive globally. So for Indian manufacturers right now, do you think this is the opportunity, this is the time, and this is something that you had in fact mentioned in your column in the Economic Times yesterday, which I was reading as well, that this is the time for the MSMEs in India to scale up, to become more cost competitive, and perhaps to look at India as the primary market and not really look at the rest of the world, especially US, when it comes to where they want to send their goods?
The two things here, Karthik. Yes, you're right. I think this is the time for us to start building the MSMEs and ensuring that they grow and they are able to build the Indian market pretty well. But at the same time, you'll also realize that India now has bilaterals with nearly every country that is a major trade partner for us.
Okay.
The GCC, the ASEAN, Australia, the EU is hoping that it will finish negotiations by the end of this year. We have now even started negotiations with New Zealand. So we will now look at other markets, certainly, to start exporting. Africa is an untapped market. I think India should look at Africa, and the MSMEs certainly can find a large market in Africa. So I think the Indian, I'm sure that the Indian policymakers are looking at a two-pronged strategy. One, build the domestic market, provide all the incentives in the sense, things that are necessary for MSMEs to grow, the finance, the technology, and everything that's required for them to grow, bring in the right kind of policies, because MSMEs do contribute to 50% of the exports out of the country, and then focus on your market. So this extra dependence on the US may move out, but at the same time, we must be clear that by September, we should have the first tranche of negotiations between India and the US over. We should have brought down tariffs, and that would therefore then bring down this 26% as well. Right. So I think by December, we would see a very different kind of maybe the way Indian exporters would be faced with. They would face lower tariffs across the globe, not just in India, but not just in the US, but in other parts of the world as well.
All right. Well, two points that I take away from what you're saying, and I want to just contextualize them with something that Commerce and Industry Minister Piyush Goyal has been saying. In fact, he was at the Newsline Global Summit over the weekend, and when we asked him specifically about how the trade negotiations are going with the US, and that's the time when Mr. Lynch, Additional Secretary from the US, was here in India. In fact, that was the day that he was flying back to the US. All that Minister Piyush Goyal told us was that India is always on track. He did not give a confirmation on whether or not those trade negotiations would conclude by fall of 2025, which is the month of September or October. But he did say that it is going to be a win-win for both India and the US. So that is one aspect of what Minister Piyush Goyal told us. But then there's another statement that that came yesterday or day before yesterday evening, if I'm not mistaken, in which Minister Piyush Goyal also said that India's reduction in import duties for inputs that go into manufacturing will make India's own manufacturing more competitive. So I want to bring this in the context again of the Indian industry and the larger economy. Does it seem from these statements that India is perhaps okay to cut tariffs on inputs that go into the larger manufacturing process as opposed to finished products which are coming into India? So that is my first question to you, Mr. Vishwanath. I'll come to the next question later.
Yes, I think inverted duty structures have been impacting India quite a bit in the terms of inverted duty structures, in the sense that raw materials and intermediates being far more facing far more duty than the final product. So I think as part of a larger manufacturing program, that's something which is an ongoing process, and I'm sure that would happen. I just wanted to say one thing very quickly, that by September, the negotiations with the US are not expected to be completed, but the first tranche of maybe the products where we could reduce tariffs will be completed. It would go on for maybe another 6 months after that for it to be fully completed.
Right. And in the absence of a complete bilateral agreement, that India would, India enjoys it with many countries, but in the absence of a concrete bilateral with the US, and that is something that India is working towards, would India be in a position to customize its trade policy only for the US? Or if India cuts tariffs, it'll have to be for the rest of the world as well, which means, and since you're nodding in disagreement that it cannot be done, this pretty much means that India becomes a happy dumping ground for every other country, and US may not really benefit much from import duties even if India cuts them.
No. When it's a bilateral, we do not have to give it to the other negotiators. But what's happening right now?
I'm saying in the absence of a bilateral. In the absence of a bilateral, if you're not able to conclude, or until, let's say, the fall of 2025, if India does decide as a negotiation tool to cut import duties, then every other country also gains from it, right?
Absolutely. We cannot cut it unilaterally only for one country unless there is a bilateral deal. The WTO, which we are still a member of, will not permit us to do that. But the whole idea is we are hoping that by then we would have bilaterals with most of the other countries, including the EU, hopefully, which has been going on for too long. And so therefore, I'm sure the negotiators are pretty clear. And as Mr. Goel has rightly pointed out, I think by then our plan would be fully ready. In terms of ensuring that we have access to other markets and we also reduce tariffs in a way that it benefits manufacturing in India.
All right. So that is one part of my question. The second part of my question, which I left for the later, Mr. Vishwanath, has got to do with, let's say India does go ahead and cut duties on paper, right? Even not waiting till the fall, maybe just to immediately get out of this situation that India and the rest of the world find itself in. If India cuts import duties right now on paper, it still has the choice on whether or not it wants to import those products specifically from the US or not.
Absolutely.
So what is stopping us from cutting importing duties to at least keep our exports competitive?
The fact is that when you do cut tariffs, then it is not meant to decide from where they would import. It is left to the importers to decide where they want to import from. So they could continue importing from wherever they are, even if the duties are higher. I think the way we have to look at it is slightly different in my perspective. I think what we have to look at is we have already reduced tariffs on some of the products which are imported primarily from the US. We had brought down duties on certain sections of wine. We brought it down on whiskey. We had done it for certain motorcycle parts and auto parts, which we had already brought it down. But the US still has gone ahead and imposed a 26% duty. I think what India should maybe want to do in the short term is to try, and which is what I think Mr. Goel referred to, where he said he's now going to change the inverted duty structure. He's going to bring down tariffs on intermediates and raw materials so that our manufacturing and our exporters benefit. And we continue to have the same kind of tariffs on finished products so that we do end up protecting some of those areas. The areas which I think are vulnerable for us, like the agriculture sector, certain MSME sectors, will continue to be protected with tariffs, and I don't see that going down in any way. Whichever way you look at it.
All right, Mr. Vishwanath, I will come back to you. We will definitely discuss pharma. We have discussed a little bit. I want to continue that discussion in a bit, but also want to discuss with you agriculture, but we'll just park it for a moment. I want to introduce my friend Kranti Batini, who joins us this morning. Kranti Batini is equity strategist at Wealth Mill Securities. Good morning, Kranti. Good to have you back on News9, but not good to see the mood of the market this morning. It started completely red. We are seeing a little bit of recovery in a few sectors, especially in the banking space. It was all red. Now we've got inching up a little bit in the green, and we've got Geo Finance, also Bajaj Finserv. Some of these stocks are coming up in the green, but the IT sector is not having a good day at all. It has not been having good weeks and good months, but today particularly seems really bad for the IT sector. Are these primarily fears of inflation in the US, which will keep US interest rates high, and that is playing out on the Indian IT story this morning?
Yes, Karthik. Good morning to you. Good morning to everyone. You are absolutely correct. The IT is the most affected sector at this point of time because right now the questions of US growth are rising at this point of time. by and large, U.S. economy is going to will definitely go through a turbulent phase in the next few quarters. That is the reason, and also the inflation is genie for the U.S. That can create more pressure on Federal Reserve to take any kind of action with respect to the interest rate cycle is concerned. These are the key concern. This is the reason we can see the immediate impact on IT at this point of time. But surprising moves, we have our Indian pharma companies do have strong exposure towards the exports towards the US. That's where the greater concern was there. But today, all the pharma stocks could able to digest, and pharma stocks all are flying at this point of time. They are all green, and it's a very exceptional day. All the pharma stocks, both in the cash market as well as derivative market, all the pharma stocks are up at this point of time. So we need to exactly go through each company specific, how much the impact that's going to have on their revenues and in the coming quarters. That's what exactly one need to look at this point of time. But by and large, the big, much anticipated, unwarranted moves that do came, by and large, Indian markets tend to consolidate at this point of time going ahead.
All right. I want to also come to you specifically on energy stocks this morning, Kranti, and energy stocks are also reeling under pressure. Is the fear in the energy stocks right now the fact that because Trump has gone ahead and imposed the 2nd April tariffs as high as 26% on India, much higher on many other countries, including Vietnam, China, Thailand, Bangladesh, Pakistan, etc. But the fact that that since one set of tariffs has been imposed, the second set of tariffs, which is on automobile sector specifically, have been imposed, then US is going to go ahead and impose secondary tariffs on countries that import oil from Russia. So even though India has increased, I was reading as high as 67% increase in oil that it gets from the US, but the fact that Russia still continues to be India's biggest oil partner, do you think there is fear in energy markets this morning because Trump will go ahead and impose duties on Russian oil importers?
Karthik, one thing is, apart from the tariff, what's taking place and how Trump is moving the coins, but right now, the question is the tariff implications are going to have domino effect on the global growth. That's where what we are witnessing at this point of time is whenever the question of global growth slowdown that comes into the picture, that's going to have an immediate impact on the in the energy sector by and large. That's where right now the pressure is getting created with respect to the energy sector is concerned. Apart from the tariff war that started overnight, by and large, how the global growth is going to accentuate in the next few quarters, that's where the key concern for everyone than the current tariffs at this point of time with respect to energy as a sector is concerned.
All right, so that is the concern on energy as a sector. Mr. Vishwanath, let me draw you back into this conversation. So we did see that pharma sector has been exempt from duties. This 26% duty is not applicable to India's pharma exports going into the US, but India has for many years, for as long as I remember at least, and I'm sure your memory would be much longer than mine, Mr. Vishwanath, India has been really protective of its agriculture sector. There's no word coming in specifically on agri. I remember even 22, 23 years ago when late Arun Jaitley was the Commerce Industry Minister at WTO meeting at Cancun, India was vehemently fighting against tariffs that WTO wanted to impose India's agri industry. Now, is agriculture also slapped with this 26% tariff in the absence of specific mention of excluding it? And what does that mean for India's pharma sector? Agriculture sector? Mr. Vishwanath, if you could unmute yourself, sir.
Sorry. I'm sorry. I think the pharma sector has primarily been excluded because at least I think 30 to 40% of the US government procurement on pharma is done by Indian generics. So it is important for them to not include pharma in terms of the duties there, and that's I think has been a great relief for the pharma sector.
Yeah.
From the agricultural sector, I think there are a couple of areas which will face duties there, but I think the biggest hit would be the fish, meat, and the processed seafood.
Right.
Because right now our exports are about 2.5 to 2.6 billion kind of exports that we do have into the US. We also have processed food, sugar, and cocoa exports happening out of India, which is about a billion. And then we have cereals, vegetables, fruits, spices, which are about close to 2 billion, 1.9 billion or so. So I think this is certainly an area which is going to face some bit of an issue when we are going to export into the US because of the higher tariffs. But at the same time, I think the US has been very keen to bring down tariffs in India for some of its agricultural products. And as we go along, I'm sure we would be able to have some kind of reciprocal maybe exchange in terms of bringing down tariffs in this area. But right now, I would think it would have, at least for the next 6 months, an impact on India on each of these areas.
All right. You specifically did not mention sugar, wheat, rice. These are also critical exports and comprise
Absolutely.
a good chunk, about 50% or so of the world's food basket. So do you think
Yes.
these staples are also likely to get impacted? Because I understand
Yes.
fisheries, etc., would be a much smaller chunk. The entire wheat and rice basket would be a much larger chunk for India.
For India, the largest is fish, meat, and processed seafood.
Okay, all right.
Then it is followed by processed food, sugar, and cocoa exports.
Right.
And then we come to the cereals, vegetables, fruits, and spices. So
Right.
that's the kind of way India exports out to the US, and this is to the US. So I think the largest hit, therefore, would be the fish, meat, and the processed food for us in terms of when we look at it.
All right. And hypothetically speaking, Mr. Vishnath, if India was to cut tariffs on agriculture imports coming in, then do you think there is a chance of, let's say, cheap corn and cornstarch from the US flooding the Indian markets? Or in your opinion, that is an overestimation of India really demanding such products into the country?
No, I seriously don't think the government would think of cutting tariffs on agricultural products. I think that is a vulnerable sector. We have to be extremely careful. Unlike in the manufacturing sector, it will take us a long while to get competitive there. I think that's a sector we need to protect quite well. So moving forward, I think there could be some areas like a few bit of almonds or pistachios and things like that where we could cut tariffs. But an overall reduction in agricultural tariffs is not something which I think India would ever do because it is a vulnerable sector and needs protection.
All right. Let's bring back Kranti Batini into this conversation. Kranti, we are seeing not much change in the Nifty 50 heat map. We are still talking about the same sectors which are reeling under pressure, but not too much downside. In fact, before you joined us on this broadcast, we had Nishal Maheshwari, and Nishal Maheshwari said that the news on tariffs is worse than what India was expecting, but the market's reaction is better than expected. So do you agree the Indian markets have not reacted as negatively as they could, given this sentimental call, at least on 26% tariff?
Absolutely, Karthik. By and large, the advantage for India is, of course, the tariff negotiations going to impact in the next coming weeks also. But right now, as the question of US growth is going up at this point of time and the inflation worries are going up, one of the key concerns what Indian stock market faced in the last few quarters have been the unprecedented exodus of foreign portfolio investors exiting Indian markets or at the same point of time exiting the emerging markets, and with a greater anticipation that the US growth is going to be very firm and strong, and they went back and invested in US markets in the last few quarters. Whereas at this point of time, by and large, the sentiment on US markets are becoming gradually negative, and there are concerns that have been rising because of the moves done by the US administration at this point of time. There are greater concerns with respect to the US growth in the medium to short term. That's where again the focus is coming back towards markets like India. That is the reason we can see some kind of a resilience in Indian market at this point of time. Definitely, there would be a reversal of these FPI going ahead. Look at our PMI index, Purchase Manager Index, which has come at a 8 months high. That shows the strength in the domestic economy. By and large, our Indian consumer, Indian consumption is going to drive the markets going ahead. Of course, exports are crucial, but by and large, Indian markets are in the global entire arena at this point of time. That's where we can see some kind of a strength that is emerging on Indian markets at this point of time.
All right, Kranti, before I let you go, the question that I think everybody who invests directly or indirectly in India's stock markets would have, and that question is that what happens to FPIs and FIIs, the inflow versus outflow story? Given that we are in this situation now, the part of the uncertainty, at least with respect to whether or not Trump will impose tariffs, is out of the window. Trump has gone ahead and imposed tariffs. Now, I think the question is, are these going to be there forever? Is there going to be some negotiation? And even if there is a negotiation, it will bode better for the Indian market. So the kind of uncertainty which was there, which was surrounding traders and investors, is now a little bit out of the window. So there is more surety in the direction that Indian markets are likely to take. So my pointed question is, with this surety now in the Indian markets and the situation given for the next 6 months or so, what happens to FPIs and FIIs?
Karthik, very interesting question. Stock prices are slaves to earnings. We are entering into the Q4 earnings are concerned. If we could able to show the resilience and also in the next coming quarters, if the earning outlook is quite strong, definitely FPIs are bound to come back to India. Most probably, there are the joker in the packs like the monsoon, which is crucial for India. So the earnings and monsoons, these are the key drivers that are going to drive the Indian markets in the coming quarters. By and large, the PMI data has been quite strong. That shows the strength of the forward-looking order books of the companies, and also at this point of time, how the monetary policy of RBI is going to come, whether there would be a surprising rate cuts. Inflation has been cooling off, and the policymakers have been trying to give the more headroom towards the growth at this point of time. These are the factors that are going to drive. By and large, Indian markets are more resilient and insulated in terms of the consumption is concerned. In terms of the FPI flows are concerned, we have witnessed an unprecedented sell-off, but despite of that, we could be able to hold on to above the 23,500 level earlier. Today, we are at 23,000 above. It shows the strength of the Indian markets at this point of time.
Right, and now we also have Teresa John, Deputy Head of Research, Lead Economist at Nirmal Bang, joining us this morning. Teresa, good morning. Thank you for taking our time. Kranti was just mentioning that all eyes would be on next week's RBI's Monetary Policy Committee meet. And I think the markets and the average citizen is factoring in a 25 basis point cut. And I think the situation becomes a little more urgent now to go ahead and cut the interest rate and spur the economy back into motion, because I doubt the commentary that will come from the RBI Governor Sanjay Malhotra's mouth is going to be very positive for the outlook for FY26, given the 26% tariffs that we have now been hit with.
Yeah, so we are also expecting a 25 basis point rate cut in April. I don't think the 26% tariffs would materially alter the trajectory for rate cuts. Yes, the tariffs on India are slightly higher than what was expected by the market, and it is largely across the board. There will be certain exemptions, for sectors like pharma. And it's not a blanket exemption, but there are certainly exemptions there. But I think even domestically as well, we are under a cyclical slowdown, and I think that is what will trigger the rate cuts more so than the tariffs that we saw announced last night, right. And also the fact that inflation is now below 4%, so that definitely gives RBI some comfort in cutting rates, so they don't have to worry too much about inflation at this point in time.
Right. So I was waiting for you to join this broadcast, so I did not throw this question to Kranti, but I will bring this question to you. And I want to understand the inverse relationship between gold and stock markets, given that stock markets are reeling under pressure. We are seeing gold is touching record highs again. In fact, it's trading at about 93,500 or so in India right now. What happens to gold prices from here? Because markets are likely to be in a state of flux for the given point of time, and the fact that US may not cut rates, India may cut rates, the differential between interest rates is going to increase. FPIs, FIIs may continue to outflow and hedge on the dollar and not as much on emerging markets. And in all of this volatility, gold becomes the safe haven, which we've seen cycle after cycle. How high do you expect gold prices to go from here?
So we don't have a target on gold prices, but in general, as you were also rightly pointing out, during times of uncertainty, gold generally does well. This time around, we've seen the situation where actually central banks have been buying up in a big way. Particularly emerging market central banks. So you had the Russia-Ukraine crisis, and then everyone saw that if there are sanctions imposed on the country, you can't do much with dollar reserves. So people have been actually shifting some of their reserves to gold. So that has actually been very beneficial for gold over the last couple of years, and probably that will sustain. So definitely positive returns from gold this year as well, given that we are living in a very volatile and uncertain world. But as I said, we don't have a target for gold prices.
All right, no target for gold prices. But Vishwanath, Mr. T.S. Vishwanath, I want to come back to you and I want to understand from you, given all that is now likely to unfold in the world, there's going to be high inflation in the US. Some guests pointing out, experts pointing out, US may be hit with recession. US sneezes, world catches a cold. This adage has been doing the rounds for decades. Emerging markets likely to be hit. Manufacturing nations like China, Vietnam, Thailand, Japan likely to get impacted. India definitely getting slapped with 26% tariffs. Given all this turmoil which is likely to now unfold slowly but surely in the world, what are those one or two things that India must hedge its risks against? What should India do? Is it time for India to buy more forex? Is it time for India to buy more gold? Is it time for India to open the world to cryptocurrency? How does India hedge this volatility which is now going to hit the market and hit the economy?
I think on what India should do with cryptocurrency or with gold, the other panelists are better to talk about. I could talk to you both from a policy perspective.
Sure.
Surely, Karthik, I think from a policy perspective, what India should certainly do is use this opportunity to cut red tape that at the best possible way. It should make the ease of doing business at the center of all the policies that it undertakes.
So we've been talking about that for the last 5 decades, if not longer. India needs to cut red tape. Yes, India knows it needs to cut red tape, but for some reason the scissors don't work. The red tape doesn't get cut.
So that's where the issue is. Now we have come to a point, I think, where the WTO, which was set up with much fanfare, I don't think is going to deliver much for us going forward, unless there is something to revive WTO. So which means there's going to be no multilateral trade body which is going to boost trade. It has to be a bilateral. And I think from a policy perspective, we need to put in a lot more effort into building bilaterals that actually lead us to far higher growth. We are renegotiating. We have opened up with the ASEAN. We are renegotiating again with the ASEAN to try and have a better deal with them. This is part of the process which happens every 2 years, but this time I think India is very serious. As I said earlier, the India-EU FTA is likely to move forward, and that's something which can give us a huge market.
Yeah.
And I think from a policy perspective, we need to look at things very differently. I think the old way of functioning will have to change, is how I would think we should look at it.
Right. What do you make of the commentary which Indian leaders, including Prime Minister Narendra Modi, are now making on China? Do you think it's time for India and China to behave like good neighbors? Galwan aside, what has happened in the past, the skirmishes aside, just in pure economic interest, is it time for neighbors to act like good neighbors, shake hands and get better trade going between the two countries? Or do you think with that, India continues to be at the receiving end because we can't match up to China's competitiveness in manufacturing?
No, I think India has made the right efforts to try and have things going with China. Now it is for China also to reciprocate. One has seen some good signals happening in the last few weeks. We have all been noticing it. Many people have asked, is this a response to what's happening with the US is doing to the rest of the world? It could be that, but I think it is time for India and China to, I think India has made the right moves in the last few weeks, if you did realize. We are allowing Chinese investments to come in. We have had some very good discussions happening on both the sides. and hopefully that will move forward, and all the tension at the border would hopefully melt away. But that's something which the defense strategy guys can tell you better on that.
All right, sure. Let's bring back Teresa. John, Teresa, I want to understand from you, in all the calculations that you've done in your research team and as an economist, at Nirmal Bang, I want to understand from you, is there a number that you have on what is kind of impact that the Indian economy could see now with this 26% tariff? I'm not sure if you would have factored in 26% as the tariff rate or not, but the fact that now we have this 26% tariff here upon us. Until yesterday, before we knew number, there was an estimation of 0.1 to 0.2% of the GDP taking a beating with tariffs, reciprocal tariffs by the US. But this universal 26% tariff rate on India across categories is something that we've just discovered. So I don't know if it's a calculation you can do at the back of your hand, but do you think there is going to be a sizable impact to India's GDP going forward?
It's I think early to say what the exact impact would be. The reason why I'm saying that is so the tariffs were imposed last night. If you saw his speech, so basically he wants people to come. At least Trump wants people to come to the negotiating table, and there has to be a little bit of give and take on tariffs. That was his entire rhetoric in the speech that he made. So I think it's still early days. Definitely 26% is not what we were working with. At the upper end, we were expecting around
were you looking at 20%? What was the number that you were working with?
So our expectation was that probably around 20 to 30 billion dollars worth of exports would be hit. So if you take India's exports to the US, it's around $80 billion, give or take $2-3 billion here or there. So out of that, say around 20 to 30%, we were expecting hit on 20 to 30%. So now the impact it would be significantly higher. Obviously, there are exemptions in certain cases, and that exemptions I think will only increase as the days go by. Okay. But definitely higher than what was earlier. What people are penciling in and what even we were penciling in earlier. So I think it's still early days to calculate the exact impact on GDP, because that will depend on the negotiations that take place over the next few days, weeks and months. If you do have a bilateral trade agreement, if India kind of gives in to some of the US demands, what we will be looking at 6 months from now would be a very different picture from what we are looking at today. Right. So to that extent, I would say to quantify the impact would be difficult. But if I just take let's look back on history in the 2017 to 2021 period. We didn't see exports decline to the US. Obviously, the tariffs then were much less than what it is currently. Sure. But we did see exports stagnate. Right. We could see a similar situation maybe for the next 1 year till we get, because in the near term there is going to be a lot of uncertainty, so that could have some hit on exports in the near term till we get clarity on what the exact nature of a bilateral agreement or what the negotiations would be.
So we can't determine the exact impact on India's economy just as yet. I appreciate that, Teresa. But Kranti, can we expect an immediate impact or a number on how you see at least this calendar year markets faring? Because it seems now that the September highs that we saw, at least on the benchmark indices, is now looking like a distant dream, and it's fairly unlikely that even by September 2025 we will reclaim those levels, or will we?
I think we need to see the things how they're going to have. By and large, the current, the entire episode is going to have at this point of time, a neutral impact on Indian economy at this point of time. But there are some domestic key drivers. So look at our GST collection, which has been going up month on month, which is a positive, one of the key parameter for the economy, shows the domestic strength. In terms of the markets to go to the previous high, one thing is the first and foremost is how the behavior of the FPIs. That's what we need to observe in the coming quarters, and also the the earnings. Q4 earnings are extremely crucial. And as I mentioned, the joker in the pack is how the rain guards, the monsoon also one of the key important factor at this point of time. If these factors are in positive way, definitely markets are bound to take the new highs.
Right. One final question, one line answer. With with correction in valuations now on Indian stocks, does it make a case for FPIs to actually reconsider India more seriously?
Definitely, the long only funds have been considering the Indian markets at this point of time. The recent correction gives a good entry level, but all the eyes on the Q4 earnings.
All right. Well, let's leave it at that. T.S. Vishwanath, Kranti Bhatini, Teresa, John, thank you so much for joining us this Thursday morning and making sense of where the Indian markets, where India's trade agreements, bilaterals, and the economy per se are headed with respect to Trump tariffs. Well, we will leave it at that for now. Remember, big news coming in, 26% tariffs on India, pharmaceutical sector being one exemption, and auto sector tariffs of 25% also to kick in 2 tranches. Our exports or imports coming into US, auto tariffs get implemented from 5th of April. Components, the implementation will be from the 3rd of May. We will leave it at that for now. Thank you so much for watching Newsline. Shweta Kothari is up next with news on Newsline. Thank you so much.
What does it take to be the greatest in the world? There is one thing which truly sets you apart. Your inner strength. Sodium DMT Rebar. True inner strength.
It's not the fiefdom of politicians. They owe it to the people. Matter is now more about faith of the millions of devotees than just political slugfest. Does that mean that I can't get a job in Chennai, although I may be best suited for that particular job? They have more civic sense. They